How's it going, everyone? It's Sam. Today we're going to go over some of the different projects that are still at risk, some of the different companies that are still at risk after the FTX contagion, and kind of breaking down every single entity that could be having troubles, liquidity troubles, or solvency issues. We're also going to look at one exchange that might actually make it through this because there's some rumblings that they might have a bid from Binance. So if you have had your funds on this, it might actually come out okay. Now, with that being said, I think it is important to say that I still think that if you have funds on there, that you should probably take the majority out and put them on a cold storage wallet because you don't know what exchanges are going to make it through this right now. So it's better to be safe than sorry at this point. Now, please hit the subscribe button underneath the video. There's also a link down there to moomoo in case you want some free money. You can try out the stock trading platform, just deposit some money on there and start trading, and you can get some free stocks. Now, crypto is up a little bit in the last 24 hours, about up 0.4%. Bitcoin's up 1.3%, Ethereum's down a little bit, kind of a sideways day, but there's still more news that's coming out on FTX. So just a couple pieces. Sam Bankman-Fried has been accused in court documents of gaining unauthorized access to FTX systems after filing for bankruptcy to transfer digital assets to the Bahamas government. So more and more stuff is coming out. People are making videos on like the top 10 things that are coming out in some of these court documents, and it's coming out pretty quickly. We also got news, or supposedly news, alleged news, that Alameda was exempt from being liquidated when trading on FTX from court filings. Now, this is obviously causing a large ripple effect, FTX going down in the cryptocurrency industry. And I think it's important to kind of look at who's really in trouble. And yesterday we talked about Genesis and Gemini. So if you haven't watched that video, I'll put it on the end screen. But Genesis seems like they're the next big problem. And they are owned by something called the Digital Currency Group, and you might have heard of them before. They have a couple really big entities that they hold, and that's Genesis, Grayscale, and CoinDesk. Now, they hold a couple other companies too, but those are three really well-known companies. A lot of people know Grayscale, but Genesis is, I think, more important than a lot of people realize. And right now, DCG, the parent company, apparently is trying to raise capital. They're looking to raise about $1 billion now. This tweet was deleted right after Dylan LeClaire kind of broke this. So I think they tried to make it a lot quieter, or whoever put out this tweet is being threatened now or something like that, because obviously there's bank runs. Whenever there's any kind of fear, there's a ton of money coming out of these kind of assets or these kinds of exchanges. So no one really wants it to be known that they're trying to raise capital in this kind of environment. And the reason that this is so important for Genesis, for example, is because it affects so many different entities. Now, let's take a look at who this really affects. So this is a really good example. You give your crypto to Gemini through the Gemini Earn program. Gemini gives you your crypto to Genesis. Genesis lends your crypto to a fund. The fund borrows from Genesis at some rate plus 2%. Genesis gives Gemini that extra percent, one of the two extra percent, so both of them get a percent, and then Gemini gives you the percent, whatever that is. So everyone makes money. The problem is that there's a lot of counterparties. So if Genesis can't get their crypto back from something like FTX, let's say, they can't give the crypto back to Gemini, and then that means that Gemini can't give you back your crypto. So there's also a lot of whales that go straight to Genesis, so they don't go through BlockFi or Gemini's because they don't want to give that extra 2%. So they'll go straight to Genesis and then just give the 1% to Genesis. Now that's why it's so bad when they halted withdrawals from Genesis, because there are institutions, family offices, and whales, they can't get their crypto back. Now, if you're a company like that and you're worried about liquidity issues, or you just want to raise some liquidity and you have a lot tied up now with Genesis that you don't know if you're going to get back, you have to sell some of your other assets, and that means that it's going to be dumped on the market. So that is definitely an issue that could come up in the future. If it comes out that they're actually insolvent, some of these offices, institutions, and whales might just dump crypto to raise liquidity. And this is just one part of this FTX collapse. Miles DeSchroeder has a really good thread as well. If you want to check out my Twitter, I retweeted this. So he talks about all the different entities that could be affected by the FTX collapse. Exchanges, because a lot of exchanges are having significant amounts of crypto withdrawn, and a lot of them had exposure to FTX directly as well. So they're kind of hit in two different ways. Because a lot of people are just withdrawing. You can see $900 million of Bitcoin moved out of Gate.io in just an hour. That's insane. And it's not just exchanges, it's market makers that provide liquidity. If those market makers have liquidity issues, then it can make it really hard to buy and sell tokens and causes the price to drop pretty quickly. There's also a lot of funds, like we said, that lost a lot of capital because they either had exposure to FTX through a token or because they held on FTX or had some kind of relationship. For example, Sino Global, who managed 300 million, confirmed a mid-seven-figure exposure to FTX, and he just goes through a lot of them. Pantera Global lost 3%, Sequoia Capital lost 150 million, and 64 million in their SCGE fund. And then Galios Capital, famous for shorting Luna, has 50% of their assets stuck on FTX. So it varies widely depending on the company, but a lot of these funds have exposure to FTX, and then lenders as well, like Genesis, BlockFi. Those companies obviously had exposure because BlockFi supposedly got a $250 million loan in FTT. And then also retail is affected by this too because a lot of people had a lot of money in FTX. So there are still a lot of entities that have capital tied up in FTX, either directly or indirectly, or they just have exposure to Genesis that has exposure to FTX, and everything's connected at this point. So there still could be a lot of fallout. I just wanted to kind of give you an idea of why this is so important and why FTX going down can cause a ripple effect. Now, one company that was directly tied to FTX was Voyager, and Voyager was going to be bought out or helped out by FTX, but obviously that fell through, and it was actually FTX.us, I believe. But now, supposedly, Binance is going to relaunch a bid for Voyager. They say that they're not trying to be the white knight of crypto, but they say that they are a company that has a lot to lose as the market leader, and they're looking around to see where they can help bolster the industry through a black swan event. So this is going to be really difficult because of the fact that Voyager has a claim that's going against FTX.us for a breach of contract. So it might be kind of mucky, but supposedly this is coming. Now, if you have assets in Voyager, like I said earlier, I would still try to withdraw them as soon as possible if Binance actually helps them out. Maybe move them to a cold storage wallet. I think that's probably the way to go. Thank you so much for watching. I appreciate it. Check out the links underneath the video, and I will see you in the next one. Bye.